Am I an Australian tax resident? It sounds like a question with an obvious answer. You either live here or you do not. But few questions in Australian tax law carry bigger financial consequences, and few are more widely misunderstood. People living overseas assume they cannot be residents. People living here assume they automatically are. Neither assumption is reliable. I am Benedict Youn, tax lawyer at Australian Tax Experts. In this presentation, we will walk through the 4 statutory tests that actually decide the question, what turns on the answer, and a case where getting residency right saved our client $350,000. 4 numbers show what is at stake. 4. The statutory tests for residency. Resides, domicile, the 183-day count, and Commonwealth superannuation. Satisfy any one of them, and you are an Australian tax resident. 100%. The share of your worldwide income that becomes assessable here if you are a resident, wherever it was earned. Non-residents, by contrast, are taxed only on Australian-sourced income. $0. The tax-free threshold available to non-residents. Australian income is taxed from the very first dollar, and key CGT concessions disappear too. And $350,000. The CGT liability our office eliminated for one client with a residency argument. Interestingly, an argument that she had never stopped being a resident. We will come back to that. Before the tests, understand the consequences, because they touch everything. First, the tax base itself. Residents declare worldwide income from every source in every country. Non-residents declare only Australian-sourced income. Second, the rates and concessions. Residents enjoy the tax-free threshold and various offsets, while non-residents pay tax from the first dollar of Australian income. And third, the CGT rules. The main residence exemption and the full 50% discount are residents-only territory. Losing residency can transform the tax outcome on a property sale. One more thing worth knowing. The reform proposals announced back in the 2021-22 budget, including a bright line 183-day primary test, have still not been legislated. The 4 tests we're about to cover remain the law. Test 1. And the primary test, the resides test. You are an Australian tax resident if you actually reside here, if Australia is your regular place of abode, in the ordinary meaning of the word. There is no formula. It is a question of fact. Where is your home? Where is your family? How long and how continuously have you been present? What is the nature of your connections? Work, property, community? For most people, the answer is obvious and the analysis ends here. The interesting cases sit at the edges. Someone arriving from overseas generally becomes a resident when they establish a home here. Someone departing generally ceases to be one when they establish a genuine home abroad, provided they have not kept a regular place of abode in Australia behind them. That proviso does a lot of work. Test 2 catches the people Test 1 releases, the domicile test. Even if you no longer reside in Australia, you remain a tax resident if your domicile is here, unless your permanent place of abode is outside Australia. Domicile is a legal concept, the country you regard as your permanent legal home, and it is sticky. A person born in Australia generally keeps an Australian domicile through years, sometimes decades, of living overseas, unless they take deliberate steps to adopt a new one. That makes this the expat's test. The Australian working abroad on rolling contracts, with no single permanent home overseas, often remains an Australian tax resident without realizing it. But here is the twist. That outcome is not always bad. Sometimes, as you are about to see, remaining a resident is exactly what you want. Test 3 is the one everyone has heard of. The 183-day test. Spend 183 days or more in Australia during the income year, continuously or intermittently, and you are generally a resident. The calendar does the counting, which makes this the most mechanical of the 4 tests. But note the proviso, because it matters. The test does not apply where your usual place of abode is outside Australia, and you do not intend to take up residence here. So the overseas executive on a long assignment does not automatically become a resident just because the days add up. The question of where their usual home is still gets asked. In practice, this test matters most for temporary assignees and long-stay visitors who never formally reside anywhere in Australia, but whose days quietly accumulate past the threshold.
Test 4 is the narrowest, but where it applies, it is absolute. The Commonwealth superannuation test makes a person an Australian tax resident if they are a contributing member of certain Commonwealth government superannuation schemes, the CSS or PSS, regardless of where in the world they live and work. And it does not stop with the member. Their spouse and children under 16 are residents too. The purpose is straightforward. Australian government employees posted overseas, diplomats, defence personnel and their families stay within the Australian tax system for the duration of the posting, however long it runs. If you are not a Commonwealth public servant on one of these older schemes, this test will never trouble you. But an explanation of Australian residency is incomplete without it. It is the 4th leg of the table. Now a complication the tests alone cannot solve. What happens when 2 countries both claim you? Dual residency is entirely possible. Australia's tests and a foreign country's tests can both be satisfied in the same year, each country taxing you as its own. This is where double tax agreements earn their keep. Most of Australia's treaties contain tiebreaker rules that allocate you to one country, applied in strict order, where your permanent home is. Failing that, your centre of vital interests, the country your personal and economic life gravitates to. Failing that, your habitual abode. And finally, nationality. 2 things to remember. The analysis is layered, domestic tests first, then the treaty. And the order of the tiebreakers is mandatory, not a menu. Done out of sequence, the answer comes out wrong.
Here is that promised case, and it turns residency intuition on its head. A client faced a capital gains tax liability of more than $350,000, and the entire outcome turned on her residency status. She had been living in the United Kingdom for over 3 years, and the ATO's position treated her as a non-resident, stripping away the concessions that would have protected the gain. Our argument ran the other way. Under the domicile test, her Australian domicile endured, and she had never established a permanent place of abode abroad. Legally, she had never stopped being an Australian tax resident. The argument succeeded. Resident status meant resident concessions applied, and the liability was reduced to nil. The lesson? Residency is not always something to escape. Sometimes it is the argument that wins.
So how is a reliable residency determination actually built? 4 steps. First, map your facts: home, family, work, assets, and days in and out of the country. The tests are factual and evidence-driven. The analysis is only as good as the fact base beneath it. Second, apply the tests in order. Resides first, then domicile, the 183-day count, and Commonwealth Super. Each test has its own logic, and shortcuts breed errors. Third, check the treaty. If another country also claims you, the tiebreaker rules decide, in their strict sequence. And fourth, document the position. Residency disputes are won with contemporaneous evidence, leases, travel records, correspondence showing intention, built as you go, not reconstructed years later under audit. An hour of documentation now is worth weeks of reconstruction later. At Australian Tax Experts, tax lawyers and accountants work on residency as one team. We provide residency determinations, a precise, documented position before you lodge, or better still, before you move, when the facts can still be shaped. We run disputes and objections, residency arguments made and won against the ATO, including that $350,000 liability reduced to nil. and we handle cross-border planning, arrivals, departures, and dual residency questions, planned across both tax systems rather than one at a time. If your life crosses a border, or is about to, your residency status deserves more than an assumption.
If you are unsure of your Australian tax residency status, contact Australian tax experts for a precise determination, before you make decisions that could cost you significantly. Visit australiantaxexperts.com.au/contact. Thanks for watching, and remember, this presentation is general information only, not personal tax or legal advice.